XAIX, so which is Xtrackers A and Big Data ETF. So it is focused on AI as well as big data. So they are investing in the digital infrastructure. Uh, so it is more about pipelines and computing rather than consumer AI. So this this ETF can be a low cost approach to thematic exposure. So it is balanced between enablers and application providers. So it is good for core exposure to AI's data and commute backbone. So low cost entry is pretty cheap. You can consider that factor. So a broad based exposure towards data driven AI enablers. So benchmark tracking with predictable performance. So in terms of negatives, there is a very less exposure towards consumer facing AI, but it is a pure index structure. It may lag active picks. So it could actually underperform in pure AI hype cycles. Since this is a new fund, alpha, beta, sharp ratio, etc., will not be available. So expense ratio is relatively cheap, 0.35%, which is actually very cheap. So the AUM is very small right now, $51.5 million. So A theme purity, 4 out of 5. Management style is passive. Focus segment is AI plus big data, which is the future. So launched only last year, 2024. So holdings 84% US, top 15 holdings Oracle, Meta, Nvidia, Bank of America, IBM, Cisco, Google, AMD, Athlon. So all the interesting companies in the AI space are present here in their portfolio. So let's look at annualized returns. So it has a very short history, not even 1 year old. So, but still they have delivered 15.7%, which is higher than the industry average. So the next one is Think THNQ. So they focus on AI companies across the value chain from chips to horizontal and vertical SaaS. So it is a mutual fund in terms of purity. It is very high with quality screening filters they use to buy a company. So they have very good exposure towards global AI leaders beyond just US tech. So it includes multiple use cases across healthcare, retail, security, automation, banking, e-commerce, etc. So it is a great choice for diversified AI plus fundamental quality overlay. If you are looking for these traits, then this ETF can be a decent option. So it is thematically driven, but it is avoiding a lot of hype making stocks. So it's a globally diversified US AI exposure, not just US, beyond that. So the mid cap inclusion adds growth potential. They have a lot of mid caps in their holdings, which can result in high growth. So fund has actually received yearly industry recognition. So high expense with active index approach. So it contains mid caps, so risk is even more higher. So it is a new fund without a lot of historical data. Fund house Robo Global, so $196 million only there in the AUM. So 5 out of 5 you would rate A the impurity. So the focus system is pure AI. So launch year was 2020. So the beta is higher than the category average. Sharp ratio is again high. Alpha is far higher. Standard deviation is also higher, which is a bit of a concern. So trainer is 11.27, category is just 8.04. So expense ratio, as we said, it is already expensive at 0.68%. So 75% US exposure and remaining in Taiwan, Netherlands, China, Israel, etc. So top 15 holdings include Umbrella, NC, AMD, Taiwan Semiconductor, Datadog, Nvidia, Cloudflare. So a proper AI themed ETF. So annualized returns are also looking promising to 21.62% in 1 year. Again, better than the category. 24% in 3 years. 16% is the category average. So they have beaten them. So 5 years, 13.7 to comparing it to average of industry average of 6.54. So the next one is WTAI. So it has a passive approach in capturing innovation through an AI lens. So it combines AI enablers, developers, and users. So designed with diversified risk exposure across sectors. So it is good for investors preferring rule-based strategies. So it is leveraging wisdom trees, factor-based methodology. It offers a low-cost route to AI innovation. So just covering the points you mentioned. So in terms of negative, uh, so in terms of negatives, passive approach may limit alpha. Smaller AUM can flagship ETFs. So it may underperform peers during bull cycles. So the fund house is Wisdom Tree, $210 million only, 5 out of 5 in terms of eighth impurity, management, focus segment, broad AI, launched in 2021. So beta again higher than the category, Sharp ratio is lesser, alpha is on the negative side, so standard deviation is high, trainer ratio is low, expense ratio is 0.45%. So pretty decent. Holding 76% in US. So Broadcom, Palantir, Nvidia, all these companies are there. So annualized return 16.9% yearly, 3%, 14.8% in 3 years. On par with category. So it is focused on future facing AI and tech disruptors. So it can likely include firms at the bleeding stage of adoption and development. So it is developed for growth oriented investor. If you're a big fan of investing in growth stocks and high growth companies, then this can be an option designed for growth oriented investors looking for long term compounding. Strong institutional brand backing from iShares. So good for satellite exposure. So it balances AI with exponential technologies as well. So strong fund house, future facing stocks they are investing in. So institutional level oversight is also there. So limited history and track record. Expense is not that high. It could overlap with broad tech holdings. So AUM is $1 billion plus 4 out of 5, which is massive. So the focus segment is very clear. Tech plus AI, launched in 2023. So 1.37 higher, 0.27 higher. And alpha is negative. Standard deviation is on the higher side. Trainer ratio is low. Expense is not that bad. So again, 80% exposure to US. So all the same companies in the top 5 holdings. In terms of returns, of 1 year, 23.18%. So the segment average is 11.7. So 3 years, 13.84, 7.88 in 5 years. So all of them are better than the industry average. So the next one is FAI, a first trust Bloomberg AI ETF. So it is actually focused on the Bloomberg AI index. So it is basically a passive fund. So it offers structured and transparent exposure to AI themes. Uh, Conservative entry into AI investing via blue chip and then emerging firms. So there is a strong emphasis on index construction and methodology. It is useful for investors seeking a blend of quality and innovation. So passive approach with diversified sectoral exposure. So let's look at more data. So structured around the A value index in Bloomberg. So transparent, accessible, negatives, less pure play exposure is what is looking like. So passive may limit outperformance and it is reliant on index construction rules. So expense ratio is 0.65%. So there is no way the other data are available in terms of risk because the ETF has been started only recently. So just $14 million, 4 out of 5, passive. Expense ratio 0.65%. And so let's look at the next data point. So 2024 launched. So 87% in US, and these are the top holdings, the usual suspects. So in terms of returns, year till date 13.57%. Compared to average, it is better. So the next one is IGPT, Invesco AI and Next Gen Software ETF. So it targets enterprise software companies deploying AI at scale. So it is ideal for believers in AI productivity revolution across vertical SaaS, AI, horizontal SaaS, and AI SaaS. So all these are new terminologies coming up. So it is focused on business transformation or just pure tech. So let's look at IGPT. So it mixes large stable companies with emerging AI leaders. So strongly aligned with digital workflow automation trends. So there is more about usage of AI than building it here. So targets enterprise software companies with AI integration. So strong and a mix of stable and growth names. So narrow focus may limit performance. So the next thing is AUM $478 million, pretty decent. So AI theme purity is 5 out of 5. Software plus AI 2005, it's been launched long back with strong hits, track record. Beta is slow, Sharp ratio is low, alpha is negative. Standard deviation is a little less when compared to the category. Trainer is less. Expense ratio slightly high. So 84% in US. So the usual 15 companies: Nvidia, Meta, Alphabet, AMD, Intuitive Surgical. So let's come back to the returns again. 8% in year till date. So 2.66% 1 year, whereas 15.22% 13 years. Sorry, 3 years return. So again, this is on par with what the average suggests. So the next one is ROBT. So we'll talk about ROBT in our next video of the series. Thank you for watching. Please subscribe to our channel.